What if I told you that despite earning more over the course of our lifetime, female investors tend to earn better returns than their male counterparts? When it comes to trading and investing, for a long time the industry has been largely one big boys club and women have been shut out. Luckily, thanks to shifting attitudes and improving technologies, that is starting to change. And today, the investing world is more accessible than ever before. So how did we get here? And what are the cold hard facts about women in investing? And more importantly, how can we empower each other to financial freedom? Hi, I'm Heloise Greeff, eToro's first female elite pro popular investor and one of the most copied popular investors on the platform. If you're new to my channel, please remember that while I am an investor, anything you see or hear on this channel is not financial advice and it's only for educational purposes. Disclaimer out of the way. If you haven't done so already, I'd love it if you click on the subscribe and notification button so YouTube can let you know whenever I upload a new video. Okay, so back to today's video. So let's start with the cold hard facts. There are some really surprising statistics that back up the notion that women are, on average, better money managers than men. So let's take a look at a few of those. Number 1, female investors earn on average 1% more than males. Now, you might be thinking, is this just indicative of more female participation in investment opportunities over the past decade? Well, in part, yes. This statistic actually comes from a study that was commissioned by the University of California back in the 90s. After analyzing 35,000 brokerage accounts over a 6-year period, the study found that women generated a 1% higher return on average than men. These findings were again repeated with an overview of open folio accounts between 2014 and 2016, showing that female investors routinely outperform males. This even included the horror show of 2015. So even in a downturn market, women tend to lose less than their male counterparts. So why is this? Here's another statistic that may help to explain this phenomena. Women trade and reallocate their portfolios much less frequently than men. In a report released by the Vanguard Group, it found that women were 50% less likely than men to trade or invest actively. On top of that, a Finance Buzz survey found that at 60%, men are more likely to check their portfolio once a week compared to 41% of women. So how does this make women better investors? Well, it's thought that the tendency to leave investments alone make women more successful in the long term in generating higher returns. The next interesting fact that sets women apart is, despite earning 20% less, women have a much higher savings rate and retirement plan participation than men. So this one stings a little because despite the rhetoric, an average gender pay gap still exists in 2022. So just to be clear, this isn't a discussion about equal pay for equal work. Regardless of the opportunity and lifestyle factors that come into play, women still earn on average $75,000 less over their entire working life. That's according to the 2021 pay scale state of the Gender Pay Gap report. The encouraging part of the statistic comes at the end. Despite this disparity though, women are more involved with planning their retirement post-employment. So knowing all of this, I'm sure you can guess my next question. Why aren't more women investing? Okay, so if women save more, they get better returns on their investments when they do invest and fewer losses. Why is participation still so low? Studies have actually found that almost 34% of women haven't even given investing any thought, compared to 24% of men. While the first factor comes down to confidence. A survey by the Financial Industry Regulatory Authority found that only 34% of women feel comfortable to make investment decisions, as opposed to 49% of men. But again, why? Especially when the data shows that we're more than capable of doing so. Well, history plays a role here. Even though financial equality has come a long way, it's not that long ago when women were still excluded or even denied participation in certain opportunities. In fact, up until the Sex and Discrimination Act was introduced in 1975, it was still legal for banks to refuse women mortgages without a male guarantor. Although a lot has changed since then, there is still a hangover that remains. So what can we do to change the narrative? So how do we get more women involved? Saving, investing, and planning for your future is a learnable skill, and only through education can we encourage more women to get involved. Here are a couple of steps that can help women get motivated and on their way to financial freedom. Number 1, take advantage of your employer's pension scheme. If your employer offers to make any contributions matching your personal contributions to your pension scheme, take full advantage of this. It's basically leaving free money on the table if you don't. Number 2, open a retirement account. If you are self-employed or you're working at a workplace that doesn't offer a workplace pension scheme, open a retirement account and start contributing to it. It's really simple to open an IRA in the US or a SIP in the UK, or whatever the equivalent is in your country. If you're overwhelmed, an accountant or a financial planner can help you to open one, but it's really simple and straightforward to do these days. I'm gonna go as far as to say that if you're watching this video, you're probably technologically literate enough to do it yourself. Thankfully, you don't have to do everything yourself. Number 3 is to use robo-advisors or copy trading platforms. Understanding the stock market, money market, and crypto markets can be a full-time job in itself. And not everyone has the time to meticulously pore over charts, market reports, and price predictions. This knowledge barrier is one of the main reasons why many women choose to save their money as opposed to investing it to grow. Fortunately, today there are a lot of services and platforms available that allow new investors to take advantage by getting advice or following in the footsteps of time-tested professionals. While I may be biased, using a platform like eToro and copying the strategies of other investors allows you to leverage their experience without having to understand the mechanics of what you're investing in. So basically, investing today can be as hands-on or hands-off as you would like it to be. My 4th and final step is to just get started and automate it. There's this big misconception that you have to have a large sum of money saved up or some inheritance before you can get started with investing. I started my eToro account in 2016 with only $300 and kept adding $50 a month consistently over a long period of time. And today the barrier is even lower with a minimum trade amount of only $10. Drip feeding or adding a small amount to your investment every month over a long period of time gives you the benefit of dollar cost averaging since you're buying the stocks at different prices every month. Over the long term, adding small amounts to the portfolio over a long period has actually been shown to outperform adding a single large amount and trying to time the market perfectly. A lot of platforms now also allow you to automate your monthly contribution. It's a feature that I personally love and use to automate my monthly contributions without having to think about it. Women have come a long way in terms of financial opportunities and pay equality, but there's still a lot to be done. The first step is to know your options and to know that you're capable of doing more than you probably give yourself credit for. Like this video if you've enjoyed what you've seen today, and if you're a female investor, let me know in the comments below what resources you have found helpful on your journey to financial freedom. Don't forget to subscribe to my channel for more videos like this one, and I'll see you all next time. Bye now!